Welcome back to the Knowledgeable Podcast, episode 13. Today we'll be talking about stocks and maybe some financial news. But anything I say or do in this video is not for you to go out and do, and it's not financial advice or to go out and do. I'm not a financial advisor. I do not do anything to tell you what to do. My advice is probably bad, so don't do what I do. Okay, thank you. It's just for entertainment purposes only. So, last week, I forget what day it was. I don't know if it was last week or the week before, but I think it was last week. The Nvidia did actually go over what they were expecting, which because they were, like I said, a while back. I forget what episode it was, but I said that Nvidia was expecting to have Q3 earnings of 11 billion, while they ended up having Q3 earnings of, I believe, 13 billion, which is a lot in revenue. And their earnings were really, really good again. So it's really good. That's why my, thesis on it, might have gotten pushed back, but here's the problem. Okay, and I'm going to keep saying this. Listen, I think it's an amazing company. It's a really great company. But the stock price to be at $499, $500, trading, different. But people that are trying to invest in it in the next 5 years, I hate to tell you this, but that's where it's going to be in the next 5 years. So you're not really going to make any money, unless they just keep pumping the market up, which is very plausible. But even then, I don't think this thing will still be, climbing, because they have pushed the market up and the stock and companies have fallen. A lot of people don't realize that this company has gone down in its stock market history. When it's been public on the stock market, it has gone down 90% in its history. It has done that. It also has gone down 50% about 5 or 6 times in its history. So, and we've seen that already in 2022. Now, I'm not saying that it's going to go all the way back down to $100. I don't think it will. I think there's too much growth involved with it for it to go down that low. The people that are saying that, I don't totally agree with anymore when it comes to that low, of it going that low. I get why they're saying that. I just don't think it's going to be plausible. But it could be plausible because of all the craziness that's going on around the world. I mean, there's been reporting that Nvidia has been blocked from selling chips to the Middle East and China, specifically the Middle East, yesterday, because of Biden's fears of, the Middle East being closely connected to China. And it's supposed to be they're blocking the chips being there. The other concern, and this is more, again, this is a lot of it's geopolitical, besides the valuation on it, but it's a lot of geopolitical concerns, is that, there's still a decent amount of chips that are made in Taiwan that are made from Nvidia, and they still get a lot of their chips from Taiwan. That is really concerning. Now, I'm not saying that that's going to be a big factor, because I do think Nvidia is starting to realize that, so they are starting to make their chips back in America and other places, and not in Taiwan. But it's still 80 to 90% of their chips are made in Taiwan. The other thing that I don't think a lot of people understand is that, and even people that, that are bearish on this thing, are also explaining that, they may own 90% of the market right now, okay, but Intel years ago owned 90% of the market of a different type of market, okay, and look at them, they gotten crushed down in their margins. This company is going to have competition that I don't think a lot of people are actually putting in play. Right now, do they have as much competition? No, but they're going to have competition in these certain realms that are going to lower their margins. Okay, and they're going to lower their margins because they're going to have to lower the prices because they're going to compete against other companies. So I wouldn't be so dampened on, okay, that's why I say I don't think this price where if you're willing to buy this price for the next 10 years, I wouldn't buy it. I'm sorry, I just wouldn't. Because if this stock goes to 1,000, I'm sorry to tell you, it's not worth $1,000 a share. Okay? It just isn't. I mean, if this stock goes to 1,000, I think this company will be at 2 trillion, 3 trillion, who knows how much. I haven't done the math, but I mean, I can probably look to try to do the math if I really want to. But I mean, this company could really be at $2 trillion. You know, now we're talking like it's a Google, and Google. I don't even think Google at one point was worth, when it got to 2 trillion, it was actually worth that. You know, so or you know, and we're Microsoft, and I'm going to tell you something. You know, Microsoft's not even worth 2.5 trillion. So, you know, Apple isn't worth 2 trillion. I'm sorry to tell you. Okay, I think Apple's worth 1.5 to 1.8. One, because it's on the market. One, because it's the largest stock on the market. You know, more market cap. And 3, because there is still some growth, not a whole lot, but there is some growth in it still. So, excuse me, whatever. But and they're big margin companies, so that's the other reason. But again, the only way this stock is worth 1,000 is if they repurchase shares, which they did say. Which what's funny is that they're only putting in like 25 billion. That's not really going to make a big difference in their. That's like a waste of money. You're just throwing money at nothing. You know, that doesn't make any sense. Why would you repurchase shares at a price of $500 or wherever it's going to be at $450? Who knows? And it's only, well, first of all, why would you even do it at $450 when you know your stock isn't even worth that? That is just beyond me. Okay, you diluted shareholders, which makes sense. I get it, you know, because there's a lot of hype in it. So of course you're going to dilute shareholders because you're able to get free capital because people are just going to keep buying this freaking stock because they're idiots. But, you know, well, they also say follow the trend. You can only follow the trend for so long. So, you know, yes, is the trend still going? Certainly it is. But here's the problem. You can follow the trend, but then the trend ends at some point. Reality comes back in play. This time is not any different. When people say this time is different, that tells me it isn't. Okay? Because they said this. Listen, I'm not saying that AI isn't going to be a big thing. It is. You know, this AI could be a $30 trillion to $50 trillion enterprise. You know, I get that. But is it? Okay? Nvidia, okay, is a chip maker. And a lot of companies need chips. I get that. I totally get that. But it's not like they're not going to have competition. I mean, there's going to be other companies, AMD, you know, Advanced, you know, whatever, Intel, they're going to still be competing, even if it's just on a lower basis. You know, you're going to have I think they're Qualcomm, I forget what their name are. I think Quant, I forget what their name is called, but you know, you're going to have other companies that are going to compete against you in that same field, okay? And those companies are just getting started with the technology you have. So yes, right now, Nvidia is ahead of a lot of these companies. They are the big company that, yes, I get why they're up this side because there's a lot of hype. I get that. And you could say it's not hype, it's this, it's hype. You know, you could take common sense and look at it and go, if it's not hype, then what is it? Because the valuation makes no sense. The growth in the company makes no sense. I mean, they would have to grow 30% for the next 10 years. Revenue and earnings. I don't know if they can, maybe earnings, but I don't know if they can do revenue. I mean, there has been fairly, well, you know, now they're saying 50%. That ain't happening. 30%, okay, there's been maybe 1 or 2 companies that have done that over time, and it's not Apple and it's not Microsoft. So, you know, at least I believe it wasn't them. They have at least done probably over 20%. But, you know, Nvidia is already $1 trillion company, okay? So you can't really grow that much more as a company from that point unless you have something revolutionary like with Microsoft probably can grow 3, 4, 5, 6, maybe 10 trillion, you know, with, I shouldn't say that. What I should say is that the revenue will still be growing because they are getting more into AI, which will grow their, margins and, in that space, and the revenue probably will add another 10 to 20, maybe even 30 or 40, maybe even another 100 or $200 billion. I don't know. But the problem is that that's great and all. That's lovely. That's, again, okay. But again, Nvidia, is going to need to have something. And in the next 5 years, they're really only supposed to grow to like $100 billion. Okay? And you could say, oh, well, Meta. Well, Meta's actually worth less than Nvidia, I believe, right now. And again, I'm not saying that Nvidia's margins are a lot better than Meta. I think they were almost at 50%. I mean, that's just crazy. That's pretty nuts. But I get that. But 50% margins aren't going to last. I mean, I hate to tell you this. They aren't going to last, okay? It's a semiconductor company that is going to, at some point, it's going to have competition. If it's in the next 5 years, if it's in the next 10 years. And my point is that right now, it isn't valued at $1 trillion. Right now, I'd be glad for you to say that it could be valued at $200 to $350 billion. I'd be glad to say that. That's where I think it's worth. Maybe 400, maybe 500 with growth, maybe 500. That's where it's valued at. Okay? This is just nuts. $1 trillion? You're gonna be kidding me. I think we're way out in La La Land right now, and we need to come back to where we are. I mean, where Microsoft is still overvalued at where it is. And it's a lot closer to their valuation, getting close to their value than Nvidia is. Nvidia is nowhere near it. Well, forget it, and I get what people say, forget about valuation. This time is different. The market manages stocks totally different. I hear all that. And when you say this time is different, it isn't. You said that during the dot-com bubble, this bubble, that bubble, this, that. That's what you said, and then the market cratered. Those stocks cratered. Amazon cratered to $16 a share. I think at one point might have been at like 10, 12, $9. I'm not totally sure. I don't remember, so don't count me on that. But my point is it came to really, really low amount of money from where it was. But that is just a pathetic valuation of 1.